The grouping of all government entities is called the general government sector, and the grouping of all public entities is called the public sector. The general government sector is subdivided into 3 levels or subsectors of government: central, state, and local. In the GFS framework, the data for all the sectors and subsectors should be presented on a consolidated basis. Let's take a look at 2 examples. Imagine 2 countries, A and B, have the same values for revenue, expense, and the gross operating balance at the central government level. However, they channel their resources to conduct their activities very differently. The central government of country A spends 560 directly and transfers 60 to its local governments, which spend the whole amount, whereas the central government of country B spends 124 directly and transfers 496 to its local governments, which spend the whole amount. By assumption, both sets of local governments have no revenue of their own other than the transfers from the central government, and they don't have access to borrowing. Now we can calculate the numbers for the general government sector. If we compare both countries at the general government level before consolidation, we see that simply aggregating transactions for central government and local governments shows country B has significantly higher revenue and expense than country A. Notice, however, that the gross operating balance of the general government is the same for both countries. Now, let's consolidate the general government numbers by eliminating the central government expense for the transfers to local governments, as well as the local government's revenue from these transfers. Now both countries have the same aggregates for revenue and expense at the general government level. The main impact of consolidation is on the magnitude of the aggregates, in this case revenue and expense. Note that the gross operating balance of the general government is unaffected by consolidation. It remains unchanged at minus 120. Consolidation adjustments do not have an impact on any of the balancing items in the GFS framework, as the consolidation process is symmetric within a given table or statement. If a balancing item changes during consolidation, an error has been made during the process and needs to be fixed.